Hey traders, welcome back, and this is a continuation of my BTC USD buy position. In the last trade, in my last breakdown, I shared the reasons behind my initial entry. Since the price has continued to respect the bullish structure, in today's video I want to teach you on how I manage the trade and what we call second entries in trading. Now, I found that a lot of traders, when they are right only once. They are not able to maximize the full potentials of the trades they take. Now, let's just do a quick preview on where we are currently at and why we took the trade. For those of you who have not watched the last video and our analysis. So here's the chart update. This is the BTC USD. We are on the daily time frame, and we identified that price has tapped into a key area right here, and we are expecting a reaction. That's a buy for price to sweep the resting liquidity above these highs. After identifying this, we now are looking for a way to enter into the market. This video is going to be a bit lengthy, so I suggest you take your time, sit back, and be ready to take in some knowledge. If you are not able to stay focused for just 5 minutes to learn something that can impact you, I'm not even sure you're ready to become a trader. So we're on the 4 hours time frame. Price has tapped into our key area, our daily key zone, and we're expecting price to reject, which price did with this long wick candle. Price just wicked it here, so that's the rejection, and that's enough confirmation for us to get into the market, for us to find entries and confirmations to get into the market. We went down to our 15 minutes time frame, and we saw our change of character right here. The change of character telling us that sellers are now losing momentum and buyers are stepping in. After we saw the change of character, we drew the demand zone associated with the change of character, and we set our limit order. Price tapped us in, and we are currently around 2 points up. So back to what I said I wanted to teach today. Most traders, when they are right, they make money on just that particular trade. Today we're going to be talking about second entry trades. As you can see, I have another entry I'm currently on, and I think I'm about 3 points up in this. So the first trade was about 1 to 11 risk to reward, and this is 1 to 8. So in total, we're already targeting 1 to 19 risk to reward. So how did this particular trade come about? After price changed character right here, and price tapped us in, we found this break of structure. Price broke structure to the upside, confirming that the market has shifted to being bullish. Well, on the smaller time frames anyway. We are still waiting for a major shift on the higher time frames. So all you need to do when you spot this is mark out the candle that caused the original break of structure, and let's take this out. Mark out the candle, which we did here, that caused the original break of structure. Go to your tools, search out your Fibonacci retracement tool. If you don't know how to use a Fibonacci retracement tool, you can scroll down in my videos. I've done an extensive video on Fibonacci retracement tool. So mark out your Fibonacci retracement tool, and when trading the Fibonacci retracement tool, we only look for 0.7 currently, because I found out that gives us the highest risk to reward, and it's also one of the safest entries when using measuring a good pullback. One thing you will find when using the Fibonacci retracement tool is your key zones in the Fibonacci retracement tool always have something that confirms that yes, price would likely react from these areas. In this case, we have resting liquidity caused by this inducement over here, caused by this inducement. So we marked it out, we drew our rectangle, and we put in our long position targeting this week high. So that is basically how we took the second entry, and I want to encourage traders to be able to maximize taking second entries. As you can see, there are no indicators turned on my charts. So even though I gave you indicators, doesn't mean I always use them. So make sure to like, comment, and follow this page for more live analysis.